Congressional Republicans are pushing a sweeping tax agenda that could reshape America's fiscal landscape, but it's sparking fierce debate over deficits, economic growth, and fairness. The plan, centered on making President Donald Trump's 2017 Tax Cuts and Jobs Act, TCJ, permanent, also includes new tax breaks set to expire in 2028, creating what critics call a tax cliff that could dominate the 2028 presidential race. Here's the latest on this high-stakes policy battle. The TCJA, signed into law in 2017, slashed corporate tax rates from 35% to 21%, doubled the standard deduction, and boosted family tax credits, among other changes. Most individual and some business provisions are set to expire at the end of 2025, potentially hiking taxes for 62% of filers if not extended, according to the Tax Foundation. Republicans, led by figures like House Freedom Caucus Chair Andy Harris and Senate Finance Committee member Ron Johnson, are determined to make these cuts permanent, arguing they've fueled economic growth and increased take-home pay for millions. The House recently passed the One Big Beautiful Bill Act, which locks in the TCJA's lower income tax rates and includes temporary new breaks like no taxes on tips, overtime pay, or auto loan interest, alongside boosts to the child tax credit and deductions for seniors. However, these additional breaks are slated to lapse by 2028, a move critics like Representative Chip Roy call a gimmick that sets up another fiscal showdown. Roy warns that the $1.5 trillion in expiring cuts will pressure future lawmakers to extend them, perpetuating deficit woes. The Congressional Budget Office (CBO) estimates the House bill would add $2.4 trillion to the national debt over the next decade, with interest costs pushing the total to $3 trillion. The Joint Committee on Taxation (JCT) projects minimal economic growth, just 0.03% over the long term, falling short of Republican claims that the cuts will supercharge the economy. Democrats and budget watchdogs are sounding alarms. The Urban Brookings Tax Policy Center estimates 45% of the benefits from extending the TCJA would go to the top 5% of earners, with the wealthiest 1% getting tax cuts averaging $61,000 annually, compared to just $400 for the bottom 60%. Representative Gwen Moore has criticized the bill's structure, noting that temporary breaks for working-class families, like the no tax on tips provision, expire while corporate cuts remain permanent. This, she argues, tilts the benefits toward the affluent. The JCT also found that the pass-through deduction, a key TCJA provision, funneled over $200 billion to the top 1% in 2022 alone. Senators like Ron Johnson advocate making business provisions, like expensing and R&D deductions, permanent, citing their role in boosting investment. However, skepticism abounds. The Tax Foundation's Daniel Bunn calls the temporary cuts bad policy, arguing they complicate the tax code without delivering broad benefits. William Gale of the Urban Brookings Tax Policy Center echoes this, warning that exempting tips, for example, doesn't help most low-income workers and undermines sound tax principles. The Senate is poised to tweak the House bill, potentially using a budget baseline that ignores up to $5.5 trillion in costs from extending the TCJA. This accounting maneuver has drawn fire from conservatives like Representative Jody Arrington, who insists on deficit-neutral policies. Meanwhile, financial markets are jittery, with Moody's downgrading U.S. debt over fears of ballooning deficits. The JCT's models even suggest the bill could reduce U.S. capital stock by 0.9%, slightly shrinking economic output. Trump has dismissed the CBO's projections as unpatriotic, touting the bill as a way to avert a $4 trillion tax hike. Yet, with the national debt nearing $36 trillion and annual interest payments approaching $1 trillion, the stakes are sky-high. Democrats argue the bill prioritizes the wealthy while cutting safety nets like Medicaid and SNAP, potentially leaving 10.9 million uninsured by 2034, per CBO estimates. As the Senate debates changes, the divide between permanent corporate relief and temporary worker benefits is a flashpoint. Will Republicans bridge the gap, or will the tax cliff loom large in 2028? Stay tuned as this fiscal saga unfolds, with trillions in revenue, millions of taxpayers, and America's economic future hanging in the balance.